No one wakes up in the morning, stretches, and says, I'm going to buy environmental insurance. So the first and foremost driver that we see is contractual. Whether it's in lease agreements, whether lender requirements, we're at the energy conference, whether it's in the agreements between the various parties in the energy industry, but it's contractual is the number one driver. Secondarily, and how the environmental insurance industry started was regulatory driven, primarily for financial responsibility. Thirdly, you do have risk managers who have a good sense of what their environmental exposures are, and from a risk management standpoint, they are transferring their risk via insurance. And the fourth, which is becoming more prevalent today, is the fact that we do have losses. You know, people are buying environmental insurance, and environmental insurance policies are paying claims. You've seen the trend, you know, through the years. One thing that we're seeing now is mold. Especially in the construction world, mold has been significant. The second, which hit the news this past summer, was Legionella. And you need environmental insurance to cover those because they're not covered under the traditional either general liability or property policies. We used a figure 20 some odd years ago of $2 billion, that the marketplace was, insurance marketplace was $2 billion. We recently had a webinar where we had the chiefs of several significant environmental carriers, and they projected the monoline, which was monoline pollution legal and monoline contractors pollution, together to be between $600 and $800 million. If you take the sum total of the premiums of the environmental units of the insurance companies, it would be $2.5 billion approximately. So that's an educated guess from talking to the various carriers. And how do you get that? You get the $600 or $800 million that I just previously mentioned, and then you add all of the package policies, whether it's pollution and contractors professional, or all of the package policies that include the general liability, whether it's for manufacturers or contractors, which actually are far more significant in size than a premium size than the environmental, and you sum those all together, you're probably in the $2.5 billion plus range. So if I was someone listening to this, you say, well, there's not much growth in the environmental marketplace, going from 2 to 2.5 billion in 20 years. There's two factors that are affecting that. One is that the premiums or the rates, we've never had a hard market in environmental in the time that I've been in it, since 1990. So rates are decreasing. Our company's been in business, we're in our 12th year, and I would speculate, more than speculate, I would take an educated guess that rates have gone down in that 12 years by about 50%. So if you put that in $2,000 or 2004 when we start, that would be $5 billion. But the rates have really, come down significantly. And I think a more appropriate measure, which I don't have the answer to, is the number of customers. And I would suggest that the number of customers has grown by order of magnitude for the reasons that I had mentioned before, because contractual requirements are coming of age. And many lenders, many real estate operators are requiring it in their lease agreements. And contractors are requiring it, general contractors are requiring it of their subs, and owners are requiring it of their general contractors, the requirement for some sort of pollution, whether it's contractors pollution or site pollution, in their contracts. And I would suggest that the number of customers has grown by order of magnitude. And so while the premium has sort of remained the same, that's really been driven by the fact that the rates have come down, but the number of customers has grown significantly, and we've seen that. We don't have a measure of new customers buying environmental, but if we did, we would see that has grown a lot.